I come to the floor today to once again press for action on my bipartisan legislation to restore emergency unemployment benefits. Over 3.5 million Americans have lost benefits since the program expired last December. And the need to help these individuals, their families, and the economy remains compelling to all of us. In April, Senator Heller and I were able to craft a bipartisan bill, and with the help of many of our colleagues, the Senate acted to restore these benefits. Unfortunately, House Republican leadership has refused to take up the Senate-passed bill or consider their own proposal. And while the President has occasionally talked a good game about the need to extend this age to job seekers, it has never been made a must-have by the administration. Indeed, it is hard to understand why an extension of these benefits wasn't included in the President's supplemental appropriations request. So as we consider this supplemental appropriations bill this week, which includes critically important emergency funding measures, it is somewhat disheartening that extending unemployment insurance, another emergency need, has once again been ignored. In the past 6 months, the national unemployment rate has dropped from 6.7% to 6.1%, and the long-term unemployment rate has dropped just below 2%. It is great to see these positive strides in our economy, but I strongly disagree with those who would argue that these signs of improvement suggest that emergency benefits are no longer needed. Let me underscore a few reasons why emergency unemployment benefits are still necessary. First, while the long-term unemployment rate has dropped from 2.3% in January to just under 2% in June, the current level is still significantly higher than at any other point when emergency benefits were allowed to expire. And in June 2008, under President George W. Bush, when the long-term unemployment rate was just 1%, a supermajority of members in both chambers voted to create emergency unemployment insurance benefits for the long-term unemployed. That was at 1%, and now we're twice that. Today, a long-term unemployment rate of 2% means over 3 million Americans who are out of work through no fault of their own have been searching for work for more than 6 months. These individuals are struggling, and with each passing month, their financial situation becomes increasingly dire. They should be held to a different standard than those who were searching for work in 2008. Second, the long-term unemployed are still struggling mightily to find work. According to a recent report by economists at the Federal Reserve, when you look at the likelihood that someone will find a job in a given month, the rate for long-term unemployed is roughly the same as it was at the height of the Great Recession several years ago. In fact, someone who is long-term unemployed is almost twice as likely to stop looking for work altogether and fall out of the labor force as they are to get a job. These difficulties in finding work are persistent across educational levels and age groups, although they are much more pronounced among the African American and Latino communities. And so we're seeing people who are trying very hard to find work, but they're facing the same obstacles that they were facing at the height of the Great Recession. And again, I think this underscores the need to help these people. Some have argued that the improvement in the labor market is driven by Congress's failure to extend emergency benefits. According to this argument, taking away unemployment benefits insurance pushes people to step up the job search. I find this argument very difficult when you face people back in my home state of Rhode Island who have been looking desperately. In a situation where there are usually 3, 4, 5, 6 applicants in some cases for every job. And they're looking and looking and looking. In Rhode Island, our unemployment rate is tied for the highest in the nation. It's not the position we want to be in. And to suggest that these people aren't desperately searching work really sort of, I think, demeans them unnecessarily. We all know, because we go home. There are people who have been looking, they're skilled, they're talented, they've worked for 20 years, they want to work. Getting the $300 a week perhaps in benefits is nothing like the salary they commanded. It won't in the long term pay for their mortgage, pay for their children's education, pay for the necessities of life. They know that, and they're in a desperate situation. And this assistance helps a little bit. But not only the contact that we have with our constituents, but recent research also demonstrates that this argument is flawed, that just cut off the benefits and everyone goes right back to work. We can use North Carolina to test the impact of cutting benefits. That state took steps in July 2013 to terminate unemployment benefits for anyone who has been out of work for 20 weeks or more. If opponents of extending unemployment insurance are correct, North Carolina's policy change should have led to significantly sharper declines in its unemployment rate. A recent article in the New York Times by Justin Wolfers, an economist at the University of Michigan and the Brookings Institutions, explores evidence from North Carolina to assess this claim. And according to his research, when North Carolina is compared with other southern states that did not cut their programs, North Carolina's economic growth, quote, looks quite similar to its peers and certainly not better. The level of job growth in North Carolina are similar to neighboring states like South Carolina that did not change their program. Dr. Wolfers concludes that, quote, there's simply no evidence that cutting benefits cut unemployment. And others have argued that cutting UI at the state level will save money and help the economy of the state, the indirect benefits. In response, 8 states decreased the number of weeks that an individual could receive state-level unemployment insurance benefits. However, a recent report from the Economic Policy Institute suggests that these states did not save significant amounts of money or boost employment. This is further evidence that cutting UI benefits is simply not a good idea. The refusal by House Republicans to renew unemployment insurance benefits doesn't just hurt individuals and families for each week they don't get this modest support. The effects are more far-reaching, with research suggesting that the long-term unemployed will be hurt for decades to come. According to research by a senior economist at the Federal Reserve Bank of Boston, workers unemployed for more than 26 weeks experience a much larger negative income effect and have a lower earnings even after 10 or 15 years than those workers that experience shorter duration unemployment spells. Many are forced to rack up debt on their credit cards just to meet basic living needs. And a recent Gallup poll also shows that nearly 20% of individuals who are unemployed for 12 months have been treated for depression. This is a serious blow, not just to your economic well-being, but to your identity, to your sense of worth, to your sense of being able to help your family and provide for your family. And these effects are long-term and very, very serious. And this rate of depression is twice as high as those who've been unemployed for just a few weeks. So there is apparently a correlation. The impact's far-reaching for the individuals, the families, and the economy as a whole. And it undercuts, again, this notion that there's no cost. In fact, there's a benefit to cutting these benefits. There's a long-term cost. And one of the aspects, too, is in order to qualify for these benefits, you have to be actively searching for work. Without these benefits, the incentives to look for work is, in some respects, diminished. And indeed, these other phenomena take place. The lack of resources, the increasing desperation and depression. Yet again, it's encouraging to see that there are signs of economic improvement. And it's encouraging to see that some of the long-term unemployed have found jobs. So we've dipped below that 2% level. But that does not mean we should turn our backs on those that are still looking. That does not mean we should treat them differently than we did people in 2008 in the same position in a difficult economy looking for work. And those of us who continue to fight for the long-term unemployed, I must also say that Senator Heller in this effort has been a stalwart. We have heard lots of excuses, and I've discussed, in my view, flawed arguments about how we should just abandon the program and, more pointedly, abandon these people. I don't think we should. What is certain in terms of the analysis that the Nonpartisan Congressional Budget Office estimates that our failure to renew this program last December will cost us, over the course of this year, 200,000 jobs. and that this emergency aid helps workers and their family makes ends meet until they find work. One of the great ironies here is that in refusing to extend this benefits, we've basically shut down 200,000 jobs in this country. It's almost absurd. You know, it's catch-22. We're shutting the doors on the unemployed so that we get them to work, but yet the analysts will tell us had we extended benefits, we would have gained 200,000 jobs. Why? Because these payments go right back into the economy. If you're unemployed, you're going to take that modest check, about $300, $350. You're going to pay your phone bill so you can call about work. You're going to get the car repaired so you can get over to the job interview. You're going to do the things you have to do to help your children get through the day. You're not going to save it. You're not going to buy French Impressionist painting. You're going to go right into the local economy and spend the money. So for many reasons, that is why I think we have to do this. And that's why Senator Heller and I have filed an amendment to this emergency appropriations bill on a bipartisan basis. And the amendment will be the same as we proposed previously, but except for offsets. That's because for the second time, offsets that we have identified to pay for an extension of benefits have been used for another measure. I guess we must take some satisfaction in that we develop offsets for unemployment, and then another program grabs them and gets passed here, but I'd rather have the extension of the benefits. And so we're moving forward, and I hope we can. I'm committed to fighting for these American workers so they won't be left behind now and for years and years to come. And with that, Madam President, I would encourage my colleagues to join us, and I would yield the floor.